I know the temperature's been dropping a bit, and so have the charts. So,
good day, everybody. It's Greg Schnell, and I am here with the October 5th weekly market review. And the downward pressure continues, although Friday gave us a respite in the US. We didn't get a lot of respite around the world, or respite. Lots of broken and damaged charts. So we're going to go through that today, talk a little bit about why I'm staying, why the Friday rally wasn't enough for me, and we'll cover that off right now. To find any of my blogs, you can go to the StockCharts.com tab or StockCharts.com page and go to the Articles tab and drop down menu on the right. And there's three different places where I publish articles. The Canadian Technician, Don't Ignore This Chart, and Chart Watchers. All three this weekend will have an article. My Don't Ignore This Chart article is about semiconductors this week. The Chart Watchers articles, lots of different choices there from different authors, so I encourage you to go check that out. Please hit subscribe at the bottom, and also try and check out my new website. It's still under development, gregschnell.com. Sign up for the launch. Should be, hopefully, maybe even on the weekend here. Contact information. Greg S. at StockCharts.com, Twitter at Schnell Investor, and the website is gregschnell.com. Hey, October 19th, we're doing an all-day investors day in Calgary, and one of the things that we've got, 5 different speakers, $35 Canadian. You can go to csta.org and register. Really some great speakers in there. We've got Jeff Hirsch from Stock Traders Almanac. I'm speaking about commodities. Dwight Galusha speaking out scanning on stock charts, and we have Tom Boley from Earnings Beats, and we have Barry Powley, a CMT here in Calgary, and he's going to speak about the macro view, both U.S. and Canadian. So lots to cover off. Hopefully there's something there for you. Give me a shout if you got any questions at one of those contact places, but should be a wonderful event. Okay, next. So our agenda today, we're looking globally, another tough one. Pretty much markets around the world were down this week. Indexes broke the 10-week moving average, or the 50-day, tested the 40-week, and then on Friday had a rip-roaring rally and got back to around the 50-day, depending on which one, or the 10-week, which one you're looking at. We're going to start off with a world review because we just finished September. And I think I just want to put the charts in context. When I read on Twitter, there are bulls everywhere. They're screaming bulls. And the only thing I can say is on my weekly and monthly charts, like, we're tepid at best. And so just want to make sure that everybody realizes it's hard to get short or long here, just because a lot of the indexes are weakening but not breaking, and so I want to talk specifically about that. This week the industrials pulled back again. The banks had a bad week. Trucking didn't do great. Rails continue to underperform, which is never good. The big surprise when I rolled through my charts, the semis held up nicely. And the problem I have is when everything else is so weak and you're trying to find that one group that's still performing. I just feel like you're not being set up with a broad backdrop of bullishness. And the second component we've got is we have the China trade talks coming up this week, and I believe the European trade talks start the week after. So lots of that stuff going on. If you're a big bull, then if you think you've got some China related trades or whatever, set your buy point just above those current levels on the stocks. And if you get pulled in, great. And if you don't get pulled in, you probably didn't work out the way you expected it to. So keep watching. But I think this week's going to be a very important one. So try to make sure that you're ready for it. So with that, U.S. dollar stuck in the middle of a 2-week range, and commodities have been roughed up. All of that makes for a rough backdrop. Let's get into the charts. Okay, first of all, here's the StockCharts.com YouTube page. And right at the beginning here, lots going on with lots of new speakers coming on. Uh, One thing I would like to say is if you're looking for my Market Buzz stuff, it shows up on the morning shows at StockCharts TV in here, Market Buzz. And if you click on this one, there's also a View Full Playlist button down here. And it's getting lots of people are watching these shows, but I think more importantly, what I want you to check out is in the last week, I did one on staying on top of the IPO space. Markets are dropping now. And what that one's about is how to get set up for the next rally. And we don't know if we're about to have it or if it's 4 or 6 weeks out. I will say all the momentum indicators have rolled over and given us a sell signal. So usually that's not the place to start adding. So we're going to watch and keep watching for those charts to start to set up. And when they do set up, I think that's a much better place to get on board. But you need to be set up. You need to be ready. And on Friday, I covered off all of these falling IPO stocks. The big thing that we want out of all of these stocks is to make sure that when they actually do start to accelerate higher, we're ready to go. So also, back on the stock charts page here, right at the very bottom, and they must have ranked the Canadians as last or something, but I'm right down here with the more from stock charts. But it's easy because you can just scroll right to the bottom of the page, and all of these articles here, you can see when you click into the articles, this is the weekly review, and I'll be moving this content or the way I do this content over to the gregschnell.com website as soon as we're up and running, and that'll be part of the subscription model over there. So hopefully you're enjoying this. And today, what I want to cover off when we get through all of these charts is just the idea of the whole intermarket picture, where I'm looking at commodities, currencies, bonds, equities, global picture, putting all of that together within 1 hour to make sure that you've got a clear and concise feel for what's going on in the big picture. It's easy to look at the S&P rally on Friday and say, hey, new bull market. The second component would be when we look around the world, there's a lot more pressure going on. So anyway, all that to set up, let's get into the charts. Let's start in Europe, and the reason I want to start there, and I mentioned it earlier, but when you look at the momentum of, say, the German market, and it's been sideways for 18 months, 2 years, really going back to early 2017, we've just hovered here, so almost 3 years. But what we see here on the monthly chart is a flat momentum indicator, and it tried to bounce up recently. That's bullish, right? Fully agree. But let's just say it's very close to zero, and we don't have a lot of altitude here. And as you can see, we have just chopped the last 5 months. That's the problem, is that we don't have any clear momentum now. Maybe we do exactly what we did back here in 2016 and then have the launch. And that launch was Fed-related, election-related, and off it went. Here we are, watching this German market grind sideways, and of course the PMI numbers, Purchasing Managers Index numbers, and ISM numbers have been weak. And so with all of those things, I think the important thing to keep track of here is the big picture is muddy. It's not clear. We have slightly rising momentum on the monthly chart, but when we go to the weekly chart, which is next, what we see here is a big downtrend in market tops, and every one of these rollovers have been more difficult, right? And so you have, in this case, we were literally up here for 1 week and then went down and went all the way back. We come up here, we test. We've spent 4 weeks trying to break through. This week we come down and we test this 40-week moving average. There's also a major horizontal support and resistance level here. So we're looking across these markets and just seeing what's going on the charts. And in almost all cases, and let's just say, okay, so on Monday, Europe rallies on the back of the nice trade out of the U.S. on Friday. Cool. So we're going to start the week up. That's really good. The big thing I want you to see here is, our momentum trend for a while now has been lower and lower and lower. We bounced off zero, we've rolled up, and now we actually got, in this case, not quite a sell signal. We're absolutely flat where it hasn't crossed the signal line yet, but we are, very, very close to having this cross downward. It's making a lower high. It's made a lower low. Typically, this is how it works. We rally up. And for those that have followed Alexander Elder, and he talks about breaking the back of the bull. So this is all of the big bull that we had. We pull back and we kill the bullish momentum, and then we roll up, and then you watch this histogram. And as this histogram starts to roll over, that's a really crucial place on the chart. And for Alex, that's Dr. Alexander Elder, my friend Alex. For Alex, when he sees it rolling over on this one, that's his signal, is that the market is weak enough. So you've broken the back of the bullish market. You come up, and at the highs of this rally, you want to start to either get short or get out, whichever way you like to trade. We're there. That's the signal we're waiting for. Here's your full stochastic rolling over steeply. It did the same thing back here in May of 2018, rallied up, and then literally gave it back. And that was your clue that things were already starting to decline. We never got back up into the top of the range like we like to. We briefly got up there and failed. This has all of the makings of something breaking down. Now, should it turn around and head right back north? Okay, I get it. I'm just saying the majority of the time, this is the setup that you would look for the market to go lower. Okay, so I'm not going to cover them all off in this kind of thorough detail, but I think the general idea I want everybody to be aware of is it's not that bullish, and it is very close to breaking either way. And if it breaks out to the upside, I'm just as thrilled. But currently, we're tepid here at best, and so this is a monthly chart, and on the monthly chart we kind of have to ignore this last candle because it's only been 3 days of data or 4 days of data. So we broke out to a new high. What's the first thing we do to start the month? Roll over. So the good news is we're still trending higher here briefly, have been since the beginning of the year. Again, on the monthly picture, but notice how low this level is. And when you go back, you don't see any real thrusts that start this week. Normally this bounce off zero, we came up, we couldn't make a higher high, we've come down, and now we have this very tepid reaction here going almost 4 or 5 months. And you can see over here it looks pretty good, but really from a macro picture, we're not exactly thrusting higher. And again, this market's holding up better than Germany. Germany is at the same level it was at the beginning of the 2017. France is quite a bit higher. But let's go down to the French market on a weekly basis. And what we see is the PPO is rolling over here again. The full stochastic is rolling over. We've got a series of lower highs and lower lows in momentum. We tried to break out for the last 3 weeks. We've held up there, and then this week we came plummeting down, and I think we closed pretty much right near the 20-week moving average on this particular chart. 20-week is the center of the Bollinger Bands. The 10-week is like the 50-day moving average. The 20-week is like the 100-day, and the 40-week is like the 200-day moving average. So when we're looking at a weekly chart, that's kind of the conversion, just divided by 5 or multiply it by 5 to get up to the daily number. We're sitting right here. We literally struggled for 4 weeks and rolled down. That's not typically that we reverse and go straight back higher. Anyway, it might happen, but the odds are working against us. And we can look over here and see it spent almost 4 months trying to break out. It briefly poked its head up, pulled right back, broke its head out, took another 4 weeks, finally broke out. Maybe that's what we get. But for now, this looks pretty much like a failed test of the high. Last time we did this, we pulled down. We got down to the 40-week. We rallied again. Now we're coming down to test the 40-week again. And the real question is, does it hold for the third time, or does it finally let go? We don't know. And I will just say that was a pretty weak bar on the back of a lot of economic data. Okay, going into the Dutch exchange, and what we see here is this is held up really nicely. Again, same thing like the rest of Europe. Most of the charts look good. Momentum is still, a lower high coming in here and pretty much going sideways to marginally up. Looking on the weekly charts, you can see a big outside bar here wiping out 5 weeks of work, and we're making lower highs again and lower lows in momentum on the weekly chart. And here's the Alexander Elder setup with you have the big breaking the back of the bull. We come down with this little bump, rally back up. This is the place to get short or get out as this starts to roll over. In this case, it's come down and come up for one more bounce. Now it already is starting to make a lower histogram. So it's not that bullish a train, and the real question is, will it get better soon? And we don't know that. Sweden, just same thing, grinding sideways here, not much new there. So weekly outside or a move through the 20 week and the 40 week, and then bouncing back up to try and hold. Obviously, a lot of work to be done this week to get the market momentum moving higher. England, and what we see on this monthly chart obviously is this big giant wedge, and we spent a little bit of time trying to get through here. Remember how Germany and France and Sweden and the Amsterdam Exchange are all trying to break out to new highs. In this case, what we see, Germany's trying to hold this big, long 2009 trend line from the lows. And again, that's another thing that's got more pressure. And here we see the monthly is rolling over. It made a lower high in August. It ticked down in August, ticked up in September to make a lower high. And so far this month, and again, let's ignore the last part, but the bottom line is we're sideways at best. Okay, getting into the weekly chart, that looks like a pretty ugly candle here. Again, making a series of lower highs. This brief move up on one morning and then pulling right back down and wiping out the month of work. We gap down the following week, make an island low, try to rally up, fail again. The momentum indicators falling below zero here. So all of these things are adding up to say we're pretty weak in Europe. Here's Spain. This is just the monthly chart, and you can just see stuck under its 20-month moving average, but continuing to cycle lower. Doesn't look that bullish. Greece, same thing on the monthly chart. Tested the prior highs and failed. We have a nice long uptrend off the 2012 lows, but in terms of momentum, but it looks to me like we're rolling over again here, just barely above zero, and that's just not enough momentum to really get it going. This is the price bar for the final week in Greece. One of the worst price bars we've had. We had one like that back in late July, and then one in late or early May. So all of those are pretty significant moves. Anyway, we're breaking the uptrend here, and it's rolling over. Let's not use Greece as the market to worry about. Here is the Shanghai, and what we see is it's still trying to hold this big long trend line on a monthly chart and the downtrend, and we're right at the apex. Which way is this going to break? This is the weekly chart, and China was closed most of the week due to its 70th anniversary celebration. So it's sitting right on its 40-week moving average. It's rolled over a little bit in momentum. Again, this is that Alexander Elder trade where you've got the big bull market, you pull back and you kind of break the strength in it, you rally back up and you have no strength, and then you fail again. That's one of the nice things about Alex's setup, or Dr. Elder's setup, is it really does make for a nice place to visualize what's going on, the way he talks about breaking the back of the bull and then the last gasp higher. To me, this fits that billing. The Hang Seng, this one's been rolling over here, and we've got downward trend. We're falling below zero in terms of momentum. Normally, that's not a great place to get on board while we're pointed south and we're going from what's called fall. We're above zero and going lower to being below zero and going lower. That's usually where we get the fastest price moves down. So the Hang Seng market, and for obvious reasons, they got lots going on in the streets there, but this market continues to look weary, barely holding up for the last 3 weeks here, and we'll just see if it's got any strength here, if it lets go next week. Sorry, that was monthly. And then here we go on the weekly chart, and we've been pulling back down. Same thing in momentum. We're not doing great. Moving on to the Nikkei, grinding sideways for the whole year here. No real price action following the U.S. It's still a series of lower highs. We're trying to bounce off zero on the monthly. That would be bullish, right? Go to the weekly chart. This was a failed breakout above these prior highs. Ended up closing right down here with the 20-week and the 40-week. Not that bullish, and momentum rolling over right at zero again. So at best, we're tepid, and I think just keep trying to keep that in mind when somebody's yelling at you to get bullish. All of a sudden everything tried to turn up at the end of August and rallied for 2 weeks and then failed. The big concern for me is the rally failed worldwide. That's a significant concern. And again, maybe we're going to pull back here and have a rally out of the China trade talks this week or out of the European trade talks this week. There's a lot of pressure because we don't have a strong economic backdrop with things weakening. Okay, India had some really nice price action coming out of new government strategies, and as it rallied up here, it literally popped right up and then rolled over. And on the rollover, that isn't what we were expecting from this big outside bar running up and then failing again. So we're right at the zero level again, not great. The South Korean market, and again, this one's got a lot of semiconductor technology stuff in there. And what we're watching for here is some improvement. But, we've been stuck at this level for almost 10 years. We had a brief rally in early 2018. And now we're trying to hold the bottom edge of this, call it 1900 or whatever. It's just a continuous river down here. So not easy to get too bullish there. The next four countries that we're going to look at are all commodity based. What you see here is we're kind of stranded up in this top corner. Australia broke through to new all-time highs, so 11-year highs. It broke above the previous high from 11 years ago and then really just consolidated for 4 months. We're not looking that hot yet. This was the price bar for the week, and we've broken the 2009 uptrend. Again, Friday afternoon, we had better markets out of the U.S. Maybe this gets a rally, but you can just see, when the Aussie market starts to let go, it's not usually a good place to be too optimistic. So we had a big rally, a pullback, come up, test the prior high and confirm it, and now roll back down again. To me, this looks quite bearish. Russia, this is the monthly chart, and you can just see a long-term trend line here. We're right up against it, have been for 4 or 5 months. Going into the weekly chart, this uptrend is in place, but the relative strength is starting to break down. RSI made a lower high. Momentum down here on the PPO made a lower high. And we're holding above zero still, but we're rolling down here right at the 2% level. My big issue is we see this same wave pattern on all the charts so far. They're all weakening and rolling over after making a similar test to the highs. That global confluence, really important to me, and so that's what makes me lean towards the side of caution. The TSX actually broke out to new highs here recently, and we saw the rally. All of a sudden we pop up to new highs and then give it back. Here's the weekly chart, and what we see on the weekly chart, again, same sort of thing where this is, you're trying to hold it, you give it back a little bit, and then you literally break down. To me, that's a failed breakout, and we have to wait for more confirmation. But that's the kind of thing we saw back here in 2018. Now, it only lasted 1 more week, and then we spent 4 weeks building some courage. I just think that, we've been declining here in in momentum for a while. And to me, it looks like, okay, this was our last gasp hope. We try it and we fail. It looks pretty tepid. Okay, Brazil. This one, big monthly chart. Look at that uptrend. And in terms of momentum, we're kind of flatlining over here on the right-hand side. Nothing really scary, but from a very high level. So that's the good news. When we look at the weekly chart, what we see is this big uptrend here for the last year and a half is under threat. We tested it again this week. But one more time, we tried to get through these prior highs, spent 3 or 4 weeks working at it, and fell down. Now, we fell below the 10-week and rallied back above it to close the week. But look at our momentum indicator. It closed rolling over and going down again. all of this just suggests to me not to get too enthusiastic. Okay, so let's go back to the S&P 500 and what happened here. This is the monthly chart. And again, we've been consolidating for 18 months now, 21 months now, since January of 2018. And we've got lower highs in momentum. But again, it's not like we're breaking down hard. When we look at the weekly chart, we see these sudden spikes down. And this was quite a rally on Friday to bring this all back together. But it was a bounce off the 40-week moving average. I think the real question is, with lower highs and lower lows in momentum, what's the most likely outcome? And to me, it looks down. Now, obviously, if China talks go well, this could, the chart could turn and soar. I think that's the only thing holding this up is optimism that some sort of a trade deal will get done. If we don't get one done, I have a feeling that these markets are all ready to crack because the momentum is so low already. The NASDAQ 100, again, just going straight to the weekly chart, we did break the uptrend this week. We spent the whole week below it, and the problem with that is we bounced off the 40-week move back above the 20-week moving average or the 100-day, and we're just trying to hold in there. I mean, this was a good price bar in that it recovered all the way. Some would call it a hammer candle, and we're ready to go higher on a weekly chart. I get all that. I think the bigger issue that we have is our momentum curves continue to deteriorate worldwide. So just be cautious here. I don't feel like it's the week where we have to get really overly aggressive. Okay, so that was a pretty big world review. Let's go up here, and I quickly just want to show some of the bullish percent indexes. Well, actually, let's just start with the advanced decline line because it's showing us something here. This was the trend line on the NASDAQ composite. We've pulled down, we've broken all of our uptrend lines. And what you see is I continue to make these lines and we continue to rally below them. We're trying to hold on this support level here in terms of the advanced decline line. If it starts to break down and get back down here below zero, that I think would be a meaningful turn down. So an important week coming up here because we have failed this breakout. We've come down, we've broken below the uptrend line. All of the other cases of that was a good place to get worried. We've dipped below it. Now do we rally and then fail? Well, we're about to find out. Okay, but it definitely tells us that we're getting weaker. In terms of high-low, we have more new lows than new highs, even though we're still very close to the highs, so that doesn't bode well. The advanced decline line for the New York stock market, this one's holding up nicely. We briefly pivoted down. We're already back in positive territory using a 2-week moving average, and we still hold the uptrend line here. The one thing I would say is that this line's getting more and more important because it's the only one that's still holding. The Dow Jones net new highs for the New York stock market, we rallied back up on Friday to get just above zero. But again, we continued to have a series of lower highs here in net new highs, and we keep pushing out the bottom side. That reminds me of over back in here. Anyway. Okay, the advanced decline percent for the S&P 500, and obviously this one is very, very strong. We see us come down, test this line on for the S&P 1500. We're trying to rally back up and get into positive territory. We're just short here. We're right about here, and this trend line is holding since the beginning of the year, but as you can tell, we've been declining for the last month. So now we're about to see which way this wants to go this week. The Canadian market, the wedge is building. It looked like we were going to break out downside or break down, and what happened was we got a Friday rally here to hold things together a little bit, but using the 11-period moving average, we're well below zero. Heading over to the high-low, once again, we didn't have enough thrust to get enough new highs to really start creating a bull market, so we rallied up and failed. A few days last week, we had more new lows than new highs, and now we're pretty much right around zero. Okay, all of that to say, lots to look at and absorb. From a McClellan oscillator, we're below zero again, and that shouldn't be a surprise. We had 3 down days out of 5 this week. And then On the weekly summation index, last week we put in a pause. This week we've cycled down pretty hard. And, normally it'll put in a stall candle or something like that towards the end of the move down. We'll see if we get that, but we haven't got it yet, that's for sure. So I think this looks not enough strength to keep us going. Same thing on the NASDAQ, and it dropped from the 200 level. That's not very bullish. That's the kind of price action we saw in 2015 when we made the final market top. So keep all of these things in mind. We're going to roll briefly into the bullish percent indexes, and you can see these green lines are from last week. We broke below, and here we have 40% of the stocks above the 200-day and only 43% on a buy signal. By any stretch, that's weak. The NASDAQ 100 is back below 45% of the stocks on a buy signal, and 63 are above the 200-day moving average. Very tepid. Looking at the New York Composite, we're at 48% and 55% are above their 200-day moving average. Once again, I think more tepid, and we fell, almost 5% this week, or more than 5. So this is very weak. And again, the lower highs, lower lows always kind of suggest the big periods where the market finally lets go. And it seems to me like it's just barely trying to hold in here, but we'll see if it gets any more strength to rally up. For the S&P 500, lower highs, lower lows in terms of momentum. We're only at 53% of them are on a buy signal. Seems more tepid to me, and 63% of them are above their 200-day moving average. When you get kind of below 60, that's a bigger deal, so we're watching closely for that this week. Canadian market, we've dropped to 63% after being at 71% of them above the 200-day moving average only a couple of weeks ago, and have already given back more than 15% of that. And then here we are, 62% of the stocks are above their are on a buy signal, but as you can see, this level's kind of been a ceiling for us for a while. Okay, let's jump down into commodities, and then if we get time, we'll head back through the currencies. But I think the commodities are the big thing to focus on this week. And the reason for that is we're heading into the trade negotiations, and I think that'll be one of the areas that pops. So let's just take a quick look. Here's the CRB so far. Big wide swinging month last month with the pop in the price of oil and then pulling all the way back to the low 50s this week. And so far the price action just been trading in a very tight range here for the commodities, but nonetheless closed down on the week. We had, this big bullish enthusiasm coming out of here. And these are the Alexander Elder colors on this chart. And what we see is when you're on red, that's a no touch. You can't buy until it starts to improve. We have this very, very long trend line just sitting up here. And if we can break out the top side here, this is an extremely bullish place to get long. I would try to do that if we could break this downside momentum. Even though everything suggests more weakness, if energy started to turn, or if the industrial metals started to turn because of some sort of a deal with China, I would expect this chart to start to turn up, and that would be something that I would really want to participate in because it's such a bullish signal for me. The commodity tracking fund, you can just see it broke the little uptrend it had going for 2 months, and it's now back at the bottom of the range. Looking at crude oil, that was a pretty ugly, briefly tried to break out on that Saudi attack, and now we've pulled back. And not only did we pull back, we've now taken out the prior low. So now we have lower highs and starting again with lower lows. So we were making higher lows before, and now it's lower lows. That's a big deal. Natural gas pulling back down right to the 10-week. We'll see if it can bounce there. Heating oil pulling back again, so it's making lower highs one more time. And same thing on gasoline, couldn't get back above its 10-week moving average. There's an uptrend line here. It looks like it's about to break. I think if the economy is so slow that gasoline, heating oil, crude oil, all are rolling over, that's a problem, and we'll end up having to try and deal with that. I know there will be somebody coming on TV telling you cheap oil is helpful, but usually what dropping prices in commodities means is lack of demand. So looking at corn, breaking above the 10-week. soybeans breaking above here and wheat breaking above. Perhaps there's an agri-trade deal going here with China, and they'll agree to buy more U.S. Farm products. That's what this chart looks like it's setting up to me, but it doesn't, the other charts don't look that bullish. So I think it might be ag related only. Here's gold. We're sitting right on the 10-week, and silver, same thing. Just kind of made a lower high this week. Nothing too bad, consolidating at best. Copper continued to melt down after looking enthusiastic a couple of weeks ago, so we've been sliding for 3 weeks now. If we start to take out this 250 level, that's what I would worry about. So this is the place where if we get the bounce, that is very bullish, and it's okay. We'd come down here, make a higher low, and rally out of the hole. Great. If we start to make lower lows on the back of the China trade talks this week, I think we got big problems. This is the livestock, and it's been trying to rally up, but just got back up to the trend line on pause. Sugar briefly broke out. Coffee went the other way. Cocoa testing the prior highs. Cotton trying to make a low down here. It is above its 10 weeks, so that's a little more bullish. Marijuana names continued to drift lower this week, not with the same pace of dropping as it has been for the last couple of weeks, but nonetheless still lower. Coal, and we had this false breakout on all of these charts, and sure enough, up and fail. So steel and coal both breaking down, lithium breaking back below its 10-week, and rare earth metals breaking back below its 10-week. I want to see all of those charts pop on the China news if there's a reason to get back in here. And then I can set my stop relatively close, but that's the kind of thing I'm looking for. Here's the Goldman Sachs Commodity Index for energy, and we have this 3 or 4 year trend line, and look what's happening this week. It is starting to break. We're below zero here in momentum and rolling over. This is quite a bearish place on the chart, and I actually thought oil would be able to bounce here on the back of the Saudi, even after the original surge, come back, pull back, and watch for these oil stocks to turn up. I still want to watch for that, but it seems to me like it's getting weaker. Okay, precious metals, again, just held up near the top. Let's go to the industrial metals one. That's livestock, industrial metals here. We're making lower highs and lower lows. And again, I want to get through this horizontal support and resistance layer, and I thought we were going to do that a couple of weeks ago. In terms of momentum, we've got real kind of pennant building here. If this starts to break down, I think that's an even bigger problem. So just stay tuned. This is a big, important week for me in the commodity space. China's a big user. If they don't get a deal done, I think all of this starts to unravel. Okay, XLE, what we see on this one is, broke out and then literally gave it all back and fell. We did kind of hold in for the last 2 days, much like the overall stock market tried to rally. We'll just see if we've got any support here because we're right down at the prior lows. Crack, the oil refiners ETF, is trying to break this downtrend. So that makes me quite bullish, and you can see the hammer candle it had here where it pulled back lower and ended up closing right up near the previous close. So for such a volatile week, it seemed to come back and hold in line, considering everybody doesn't want gasoline these days. Frac. We got a downtrend here going for a couple of weeks. We're testing these prior lows. If there's a place to expect a bounce, wouldn't it be near prior lows? So I'm watching closely on these charts. Weekly, just big picture, we're rolling over in terms of momentum. That's not very positive. And again, if these lows don't hold, I think this could really, it would probably tell us that the overall market was going to get a lot weaker as well. Here's crude oil, and you can see that on this daily chart, we broke the uptrend. We came down to test horizontal support and bounced. And, now we're holding right near this trend line. And so here's the price action down in here. This follow through off the hammer candle was okay. You tested lower, traded higher, and closed higher. So that's good. I would just say it doesn't seem that robust to me. So watching very, very tepidly. USO, just, the daily trading inside crude oil. What you see here is, this big fall down here. There's nothing saying that we're done yet, but we're testing these prior lows. So that's one of the things I want to watch for. And then the other thing we have to watch for is this uptrend line here in momentum. If we start to break lower again, that's just too bearish for me. That would be another leg down on these oil stocks. Okay, natural gas, you can see that we broke support here back in the spring. We've pulled down, rallied back up, and now look to be trying to make a higher low on the back of this downtrend line. This is not a bad place to get long natural gas, and if it was to fail, then your stop is right below. So I like that from a trading perspective, just that it broke out of the trend, came back, back tested, and could be on its way higher. The nuclear stocks, this is the power plants, again, trading sideways in a range, no real uptrend. And here's the uranium ETF, and it's just wobbling around here, not doing too much. Continues to just barely get above zero in terms of momentum and roll back over. Looking at it on a weekly basis, we can see this big downtrend is still in play. And we've got a downsloping momentum indicator, and it continues to drift lower. And when we look at Cameco, the big dog in the park, this one just continues to make lower highs, lower lows, and it rolled back over again this week. So hard to get too excited in that space. Copper, after breaking below this big long-term trend line, rallied above it and now giving it back and starting to end up trading below. Here we're back under this line. That's really a problem for me. We need to see this chart really start to take shape over the next 2 weeks on the back of some better trade news. And until we get that, I think we've got a big problem. So this is the one I'd watch. And if copper starts to go, I want to trade COPEX and ETFs like that are metals related. So this is the COPX, the Copper Miners Index, and again, or ETF. If this is going to break higher here, we'd have a higher low in place and start to build off that. That would be bullish. Way too early to start calling that as a success story. Okay, here's steel. And again, thought we were going to get some sort of a move here, rallied up, got to the 40-week and failed, and we're dropping back down. Lower highs, lower lows in momentum, below zero. The only thing I will say is it didn't drop that hard this week. I mean, it was down 2%, but it wasn't down 10%. So with all of the hard pushes we got. Okay, this is the gold chart weekly, and you can see, is this a bull flag where you kind of run up and then make a series of lower lows and lower highs briefly and then turn and revert higher? That's a great question. I will say it with the PPO way up here, I have a hard time wanting to get a lot longer with gold. Okay, and that's the flag I mentioned here. It's just in this sideways channel. Started the week testing the bottom of it, ended the week near the top of it. It is trying to break this downtrend line in momentum on a daily chart. That's a little too short for me, but it's trying to turn up. The 5-year picture, this is the flag we talk about. Here's the flagpole and the little flag on it. And then normally that reverts higher, and then we take the height of this whole move and add it on to this move. So if that was the case, that would be extremely bullish, but I just think this momentum wave is up high enough that that's probably not what's next. For GLD, just an ETF we can actually trade the gold in. We had a big volume week with a lot of, with a higher close, which looks very bullish on the chart. So it is one thing to watch, and we're trying to get back above the 10-week moving average. Usually in commodities, that's a better place to be invested in them above the 10-week. So for the gold miners ETF, what we see here is this grinding sideways for 3 or 4 months, and I know it was a good trade a while ago, but it's rolling over in our PPOs on a sell signal. We're above zero, we're above 5%, so still could come back and just revert and make a higher low, take off again. So we're watching to see if this is going to be a bear flag and we actually get the conversion out of here. Should make up its mind this week. And I think if we don't get a China deal, we'll probably see this chart expand. GDX, just comparing it to the Canadian dollar in here, this is grinding sideways, Canadian dollar doing the same. Briefly, Canada had broken out of a downtrend on the dollar and then gave it right back, and we're just, you know, pretty much for the last year have chopped within a couple of pennies of each other, so nothing really to talk about there. Gold continues to outperform the S&P 500. You can see this uptrend in place here. What we want to see, obviously, that's when people like to be invested in gold, and when it's downtrending, that's when they don't like to be invested in gold. Making it very difficult. We do have an uptrend here on the GDX that's threatened. So I would just say gold looks very torn. It doesn't have enough momentum to break above or to stay above this trend line. I think I want out. Any sort of a bounce out of here could be very, very bullish, but I think the market would have to fall apart aggressively for that gold to get a bid. Silver, same thing, pulling back hard, or not hard, pulling back, and we're waiting the outcome of the next kind of move here in the markets. Silver, there's a better example of our flag, because that really looks like a flagpole and then just our flag waving lower. We'll see if it can get the second half of that deal and move to the upside. The silver miners are trying to hold up. There's some better price action, but what do you see on the momentum indicator here? It's rolling over very close to zero, so not really that strong. Yeah, let's cover lumber quickly. What we've got on lumber is this momentum indicator is right at zero, the PPO. Wood had broken out to the upside, and I thought we were on our way. And then, sure enough, as the overall market rolled over, this ETF rolled over. So down 1 week, sideways 1 week, and down again. Lumber's grinding in this channel here. Really need to see that hold up. If this starts to break lower, you can see the long-term trend here around $300. If we start to fail below that, now it looks like tougher times ahead. So there's the wood ETF. Again, it had broken its downtrend, so that was somewhat hopeful. And immediately when the overall market started to pull back, it gave it up too. So took away my bullish bias. Let's run up here and just work through some of the index looks that we've got on these charts. Options expiration pretty much topped right with it. We've been pulling back ever since. Got down to the 200-day moving average and bounced off it. So that's the good news. We don't have one of those for another couple of weeks, so we got some time between now and then, and we have the Fed meeting at the end of this month. So this is the chart of the Fed meeting, and you can see the down day on the Fed day rallied back up, tried to make a higher high, and we've been going down since. It doesn't look like that bullish a setup. We've seen these kind of 2-day moves up, and then they roll back over again. We'll see if that's what we get to start the week. Put call ratio had spiked up and then has pulled back into a normal area. This is the big bounce, and it really was a big bounce. We're up almost 3% in 2 days, or from a day and a half. Nothing really to talk about there other than, you know, the momentum, the upward momentum again continues to be stalled, and this is so we had 1, 2, now 3. Have we got the momentum to get going here, or does this just struggle and roll back down? Pretty important place on the charts. We're still making a series of higher lows, so that's the good news right now. We have a lower high in place. Comparing the three indexes, the Russell, the NASDAQ 100, NASDAQ Composite, and the S&P, this one bounced off its 200-day moving average and is still trading very close to the breakout level. For the NASDAQ, we're still well below that breakout level, and for the Russell, we actually tested the bottom of the whole range here. So we're not getting higher lows, we're just getting similar lows on the Russell. So the small cap's still underperforming. Anything else? The one thing on these distribution days that we talk about, so, you know, just looking at the volume here, we've got 1, 2, 3, 4, 5, 6. That's enough usually for the market to start breaking down hard. When we get that sort of distribution, I'm still hung up on the whole China trade thing. I think that has been lingering ever since they announced them back in early 2018. And so if we can start to get some positive resolution there, or a resolution there, the market can probably work that into the pricing and get it going. We had this dip briefly below where the Nasdaq was underperforming the S&P 500, and to me that's one of the sell signals to watch for. What did it do this week after breaking below, bouncing right back up? So let's just put that on hold. I'd say that line definitely got threatened and broken. If it's going to rebound right away, that's a pretty solid landing. But we have lower highs in momentum, which continue to concern me. Nothing to really go through there. I'm going to cover off this emerging markets, and it is emerging. We're right at the end of this triangle wedge, and how this resolves pretty critical. You can see this uptrend line works pretty well off the late 2015 low, then ignoring the bottom of this. And the reason I did that is it has so many touches on this line if I do it this way. So to me, that's the important line. We've got a 38 level here that pretty much the last point is support if the market goes from this 40 level down. Full stochastic rolled over again this week. PPO is right at zero, rolling over. Very, very cautious. Hard to get very enthusiastic the way the price action ended up this week. Let's briefly look in the bonds, because there was a little bit in here that surprised me. So the LIBOR continues to drift lower. That hasn't been that good for us. And then when we look at the HYG, this was a big bearish reversal where it had a failed breakout and then quickly turned back down. Let's just take some distance off this chart. What we see here, zoomed in, hard to say that it's breaking down yet because it's still, got a trend of higher lows, but this looks clearly like a failed breakdown to me. And look at the momentum wave making lower levels. That's not that helpful from an overall perspective. The 7 to 10 year bond is testing this prior high level and, thrust up, pulled back, thrust up again. Normally this second thrust would run out of energy, so we'll see if that's what happens or if it's actually got the strength to keep running. But I think we're going to run out of energy here and this rolls back over. The ratio of the high yield to the 7 to 10 year bond, when this is trending higher, when the high yield is outperforming the bond price, obviously that's a risk on. We're going the other direction here, and so until that starts to improve, probably more difficulty ahead. LQD, the corporate bonds, retesting the highs after the big bounce this week. And this is the inflation protected treasuries. What we see here is this has tried to rally up, and on here I've got crude and gold, so crude in orange and gold in yellow, and the yellow is hidden a bit behind here. But you can definitely see crude rolling over quite hard, big downtrend. I expect that this will probably follow crude lower. TLT sitting right on this momentum trend line here, so we've rallied up. If we get more weakness in the bonds this week, I think that's where it rolls over in bond price, rises in bond yield, and I'm not so sure that it'll reflect the stock market. I just get the feeling that the bond move is mostly done. Looking at the monthly chart, again, we're testing this big picture low here, going back to 2012. There's an uptrend in momentum we had going here that clearly got trashed, and we're all the way back down here at one of the lowest levels that this gets to. Now, obviously, in 2012, when we made that major bottom, momentum got a lot lower. So perhaps we're going all the way down here. I just that chart is really stretched, so perhaps it does. But when it moves, I think the move will be so vicious that it'll be very, very hard to stay in the trade. So if we get a bounce, so we bounced, we pull back, and then this next bounce here, I would expect that to have a lot of upward thrust whenever it comes. So I would be cautious staying in that trade a long time. For the 5 year, big downtrend in place. What else to say? We're testing the lows again, and the shorter term charts, they've had big moves. Look at the 2 year, just stunning move down. This is a daily chart, so Friday got a little blip up, but what a week! Really, really significant move down and made new lows. So that was a definite push. And then on this chart here has a couple of things for us, right? One is that the PPO is at a pretty extended level down here at 10, and the stock market back here in 2000 and 2002 when it got to this level, those are good times to expect somewhat of a rally. And then it rolled back over once it got to zero. I think the bigger issue we've got here is as this tries to rally, will the money convert over into the equity market? And we don't know that if there's global weakness. And I think if the stock market doesn't perform well, then people will stay hiding in bonds. But that to me looks very risky. On the 2 year, one of the things, if we go back and try to look at just how this 2 year and the timing of the stock market worked out, here we have 2000, and when this went below zero, this was a pretty good signal that things were broken. In 1998, it did it as well. In 2007, it did it, and we've rallied up, and we never got to below zero in 2015-16. But here we are, and we're just going below zero this week. I think that's the bigger issue, is all of a sudden we're getting these long-term signals of recession. But I did go through those charts in my chart review on Friday on the Market Buzz. Showed you where that video is at the beginning. So feel free to go check that out. But a lot of the recession charts aren't setting up yet like they're ready to break. So as difficult as the market is here, we still need, some of the early signs aren't showing up enough that I want to make the move to big downward thrust. Now, I'm clearly, at this point, I've lightened my exposure significantly in the stock market. I think the overall equity tune looks weak, but this bond market looks very weak as well. And look at this thrust down on the 3 month. This thing is literally plummeting faster than you can imagine. So in the last 2 weeks, it's just knocked off. That is a crazy level of rundown. And if we just unwind the tape here, this is such an acceleration lower. So all of these in here I thought would be signals to help us mark a stock market top. And we continue to just, while we might have made the top, we continue to hold up at these high levels. Okay, running out of time here. I do want to show you my website that I'm trying to get finished here. It's gregschnell.com. And if you go here and just enter your email up here or enter it down here with your name and a message, would appreciate that. I hope to get at least an early version of this weekend's newsletter out to everybody who signed up, and then you can check it out. And then over the next week, we hope to have the payment system working in the back end. So that is a big initiative. I'm just surprised at how difficult it is to get all the pieces to coordinate behind the scenes. Lastly, on Friday, I did cover off all of the IPOs, and one of the things that I talked about in the IPO market was, the charts are ugly. They've been breaking down hard, and you want to get set up so when these big names turn, so whatever, let's just say that finally Uber makes a turn at the bottom, much like Facebook did after it fell hard, and when it starts to turn up, at least have something in place to help you find those lows. And so this is an entire chart list of IPOs that have happened in 2019. And they don't get a scooter ranking because a lot of them don't have enough data to create the scooter number. We need at least 200 days of trading. We need those types of things finished. So that's almost 2/3 of a year, right? So anyway, with that, now we see a lot of these charts are trying to get going. Here's Pinterest. The idea being when these charts start to turn, you want to get on board, and we'll probably get a wonderful signal across all of them, and that'll be something to really help us engage. So go check out that video, and hopefully it helps you a lot. With that, I'm going to sign off. Have a great week, everybody. I think it's going to be a really important one for the commodity space, so stay tuned and try not to be two one way or the other because I think the market could move quickly. Thanks. Bye bye.